Hello, everyone. It's a pleasure to be talking to you today. This is Shaily Gang from Tata Mutual Fund. I lead the products function at the fund house. The topic for today's discussion is the sectors in focus, more so post budget 2021, and the sector funds you could look at. First up is the infrastructure sector. This sector includes companies which invest in long term and physical infrastructure like roads, electricity, networks, ports, etc. Companies who make large scale capital investments like metals, telecom, realty, oil and gas, etc or companies that benefit from such investments like building materials, engineering, construction, capital goods, etc. The capex cycle is recovering with sustained government spending combined with rising investments from the private sector. We expect private sector investments to increase, especially on the manufacturing side, as India becomes more attractive for manufacturing due to various game changing initiatives taken by the government, like production linked incentives, reduction in corporate tax, and relaxation in labor laws. In fact, in the union budget, the government has allocated significant spending on capital expenditure, which is expected to be beneficial for cyclical sectors such as industrials, capital goods, metals and mining, etc. Infrastructure and manufacturing, both revival of both is likely to be a key theme for FY22 due to the focus on growth in these sectors in the budget. Increased spending on key infrastructure such as power, highways, gas distribution networks, renewable energy, and transportation is also a positive for the infrastructure sector. Valuations in this sector are near long term averages and are a suitable entry point for investors. The other sector coming up, which is in focus, which we believe is in focus, is pharma and healthcare. US revenues declined over 25% for most large Indian pharma companies over FY15 to FY19. Increasing number of shortages, improving pricing scenario, product prioritization is leading companies back to growth trajectory. Balance sheets also to become more leaner, with most companies turning net cash over the next 2 years. The types of businesses, which are covered in the pharma sector include manufacturers of generic and branded drugs, makers of APIs, which are basically active pharmaceutical ingredients, as they are called, and CRAMS, which is basically contract research and manufacturing. Healthcare sector includes hospitals and ancillary businesses such as pathology labs. So the domestic market has seen significant expansion, growing by approximately 10% in FY20 and has grown by double-digit CAGR over the last decade. COVID-19 has led to higher focus on the healthcare spend for all the economies, including India. This was also visible in the budget this year, where the net allocation to Ministry of Health and Family Welfare has actually increased by approximately 10% year on year. I think it was approximately some 713 billion rupees. Despite this, India will still be at just 4% as a proportion of center and state spending at an aggregate level, whereas the other developing countries like Brazil and US are at 10% and 17%, respectively. Hence, the overall pharma and healthcare sector should continue to see strong growth as India expands its healthcare reach over the next few years. Valuations in this sector are higher than long-term averages, but this will be supported by the substantial earnings visibility which is in place for the next 2 years, 2 to 3 years. Next up, an important sector from India's economy perspective is the BFSI, the banking and financial services sector. The banking sector includes, or the banking and financial services sector includes, in India, includes subsectors such as banks, NBFCs, asset management companies, and life and general insurance. So we believe that select banks and NBFCs will be able to leverage their expertise and established market positions to grow their retail loan books faster than the market projections. Consumer debt levels in India are also significantly below than those seen in other emerging and developed economies. And this suggests that this will remain an important growth driver for the Indian banking system in the coming years. Improved growth outlook is likely to aid recovery in loan growth and asset quality. Importantly, asset quality stress has been contained. This provides room for re-rating, especially for those lenders which had seen more impact in the previous credit cycle. Again, in the union budget, the government has announced incremental reform steps in sectors such as creation of an asset management or asset reconstruction company, ARC as we call it, which is a very positive step, which will help accelerate NPA resolution, and announcing of divestment of two PSU banks is definitely a positive one for the sector. And the third highlight is the increase in FDI limit for insurance companies from 49% to 74%, which is another big positive for the sector. Talking about valuations for BFSI, they remain reasonable in many pockets, as we spoke about the subsectors. And this is the third sector, banking and financial, for clients to, for investors to focus on. So I hope I've been able to place takeaways for you all to consider for the sectors. The earnings profile of infra is, since it is a summation of a lot of subsectors, is very varied. But this is one sector in focus which you can consider. And the pharma sector looks good from sustainable earnings for the next 2 to 3 years perspective. The earnings growth expectation here is to the tune of 15 to 20%. And looking at banking and financial services sector, here the earnings expectation is about 30 to 35% because of its low base. One can consider this for long period investing. So this is from us. Stay invested. Happy investing. Thank you.
Mutual fund investments are subject to market risks. Read all scheme related documents carefully.